attended the workshops yesterday, you could have heard this next speaker. He was in the RIA track. He's author of 10 books. He's got a daily podcast. Please help me give a warm welcome to Rick Edelman.
Thank you. I'm glad to be here with you. And just backstage, I spilled coffee all over myself. So you will definitely remember this session because I'll be the guy you'll remember as being all wet. I'm really happy to be here with you because this session that I'm going to share with you is something that I think will be a little bit different than what you typically see, and I hope you find it informative. If we can bring up the slides. This was titled as the most important asset class since the invention of the internet, but frankly, it's how everybody is screwing it up. You may not be familiar with me. I created Edelman Financial Engines, which is the largest RIA in the country with $260 billion in assets and 1.3 million clients. About a third of the Fortune 500 are our clients. We manage their 401k plans for 1 million people around the country. And most folks have never heard of this kind of an organization, and that's what I want to really relate to you. But although I've been a financial advisor for the past 40 years and been ranked the #1 advisor in the nation 3 times by Barron's, I got into crypto back in 2012, was my first heard about Bitcoin. And what I discovered pretty quickly is that Bitcoin and crypto, generally blockchain technology, is a transformative technology, but most people in the financial services industry don't know that. And as a result, we're severely impeding the ability for ordinary investors to engage. So in 2015, I created DAC-FP, the Digital Assets Council of Financial Professionals. We do crypto education for financial advisors and financial services firms, and we created the CBDA designation, which is a FINRA-listed professional designation certified in blockchain and digital assets. And what it really comes down to is the fundamental question, what is DLT? And when I ask that question to a lot of folks in this industry, they just go nuts over this is transformative, it's revolutionary, it's going to unwind the entire global financial system. At the end of the day, DLT is really just software. I mean, it's better, it's faster, it's cheaper, it's safer, more transparent with greater inclusion than other software we've been using. But at the end of the day, it's simply just software. And we've got to recognize that most Americans are not really paying a lot of attention to the underlying technology. All they care about are the features and benefits. Is this better for me in my daily life than what I'm alternatively doing? We've accomplished a lot in crypto over the last 14 years. 400 million people around the world own it, including 52 million Americans, but that's only 5% of the global population. And the crypto community has been struggling to get the other 95%. And if you want to accomplish that fact, you need to engage with financial advisors. What I have found in my decade in the crypto space is that most folks in the space don't understand the financial advisory community. There's $100 trillion of wealth in America. 67 trillion of it is investable assets. We're talking about bank accounts, stocks and bonds, mutual funds, ETFs, etc. Financial advisors control 2/3 of those assets. Ordinary American households turn to a financial advisor for help in managing their money, their IRA, their 401k, their brokerage accounts, their bank accounts, which means that you need to understand the world that financial advisors live in. You see, there are basically 3 kinds of people. Mass market Americans, these are people with less than $100,000. Mass affluent, who have $100,000 to $3.5 million. And the high net worth and ultra high net worth, who have assets of $3.5 million or more. When you look at how this money is allocated and distributed across America, the mass market is most of the country. And together, they've only got $2 trillion in assets. The ultra high net worth and the high net worth, all the rich people, there are only 2 million of them. And they control $20 trillion. We know that most of the money in this country is held by a relatively small group of people. But it's the middle segment, the mass affluent. There's a lot more of them, 15 times more, and they have even more money than the very wealthiest in America. That's the group, the mass affluent, who financial advisors are primarily targeting in their effort to find clients. So let's look in detail at that mass affluent group. You break it down into 4 segments. Most financial advisors are targeting clients with $500,000 to invest up to $3.5 million. We're talking $16 trillion in assets that these folks manage. And of those with $1 million or more, don't call them rich. I learned that lesson a long time ago. You want to piss off a client? Accuse them of being wealthy. They are not going to be happy to be accused of that. Most millionaires consider themselves to be in the middle class. This group of Americans has $1 trillion in crypto assets, not just here in the US, but globally. Advisors have the potential of generating $10 billion a year in annual asset management fees, but advisors are only capturing 4% of that revenue because they are only managing 4% of the total crypto assets. Most people who buy crypto are not buying it through their financial advisor. In fact, only 12% of advisors are currently recommending crypto to their clients. This is a problem because 8 out of 10 investors say they expect their advisors to be knowledgeable about crypto. 6 out of 10 say they'll be willing to change advisors in order to get advice about crypto. So why aren't financial advisors routinely recommending crypto? The simple reason is because you in the crypto community are not helping advisors. You're not helping them because you don't understand them. And because you don't understand advisors, you're not building products or services that serve them. I was at a crypto conference last week in San Francisco where I was speaking, and there was a panel session, and one CEO of a company that is building a really cool real estate tokenized business, tokenizing real estate and selling these assets to investors. And he was describing how he's trying to get the attention of investors in order to buy the product that he's selling. And during the Q&A session, I asked him, how are you interacting with RIAs? And his response was, what's an RIA? And that kind of speaks volumes. There are 3 kinds of segments within the advisory space. There are financial advisors, independent broker-dealers, and RIAs. And you need to understand these segments. Financial advisors, you well know, these are stockbrokers and investment advisors at the big brokerage firms in the country, hundreds of thousands of these people. And then there are independent broker-dealers. These are firms that aren't the big, wirehouses like Merrill Lynch and JP Morgan, companies like A.G. Edwards and Edward Jones, who also employ tens of thousands of financial advisors. And then there are RIAs, registered investment advisors, who are independent. Picture, the little local accounting firm or the local dentist or the local butcher, small mom and pop shop who run their own business. Although they are independent advisors operating their own business, under securities laws, they have to custody their clients' assets with a custodian. The big 3 are Schwab, Fidelity, and Pershing. Pershing is a division of Bank of New York. Let me drill into RIAs for you, just to give you an illustration of how big this is. There are 32,000 RIAs in this country. They employ 300,000 financial advisors who are collectively managing $8 trillion in assets. When somebody becomes a client of an advisor, they are delegating the investment decision to the advisor. The advisor can buy and sell whatever investments they want without having to ask the client for permission. We get what's called a discretionary authority to buy and sell investments without getting a prior permission or approval of the client. These are the biggest investment RIA firms in the country, and I'm willing to bet you've probably never heard of any of them. Out of the 37,000 that exist, these are the biggest. What do investment advisors do? How do we manage assets for our clients? This is a kind of an example portfolio, broad-based diversification. Stocks, bonds, international securities, real estate, natural resources, exponential technologies. Broad diversification, because we know the way you control risk, the way you reduce the risk of a client losing a lot of money, you put 12 eggs in 12 baskets. We believe in long-term investing. Do not try to talk to a financial advisor about what Bitcoin did yesterday. We don't care. We don't care what it's going to do tomorrow. What we care about is what it's going to do over the next 10 years. We are long-term investors, not day trading market timers. We believe in portfolio rebalancing. As an asset rises in value, we'll rebalance down to a target position. If it falls, we'll buy more up to the target position. This helps us sell high and buy low, which is a wonderful way to manage money. We use dollar cost averaging and tax loss harvesting to increase the efficiency of the client portfolio. We're using modern portfolio theory, the efficient frontier. We pay attention to the Sortino ratio, the Sharpe ratio, standard deviation, and max drawdown, all in an effort to effectively manage and optimize our client portfolios. But if you think that investment management is the only thing that financial advisors do, you're misunderstanding the true role that we have. In fact, we are touching every aspect of the client's life that has a dollar sign, whether it's planning to pay for college or planning to pay for a wedding, helping get our clients' parents into nursing homes, getting their teenagers into rehab or out of jail. We are dealing with all the elements of intergenerational planning, all the human soft stuff. When we do a client review meeting that might be 2 hours long, 10 or 15 minutes is devoted to the investments. The rest of it is what's going on in your life, what's happening in your career, what are your goals and aspirations, what are your fears and risks, what's happening with your parents, what's happening with your children and grandchildren. This is the role that financial advisors have, extraordinarily close relationships. When clients die, the surviving spouse makes 2 phone calls. The first is to their children. The second is to their financial advisor. I've been on a number of deathbed scenarios. One memorable one was a client of mine who was dying. I was there, his wife was there, his attorney was there, and his dying words were not to his wife, but his dying words were to his lawyer when he said, "Does Rick Edelman know what he's doing?" We are the ones who have an incredible impact on our clients' lives because of our engagement with our client in all of these issues. And yet, only 12% of advisors are recommending crypto to their clients. 77% are waiting for the spot Bitcoin ETF, which the SEC has not given us in 7 years. And we are anxiously hoping that it's coming imminently. Financial advisors are waiting for this ETF because ETFs are familiar to advisors and their clients. Most advisors build their portfolios with ETFs. They're inexpensive, they're transparent, they're highly liquid. The prices trade all day long with the stock market. Clients are familiar with them. They're comfortable. You buy them in an ordinary brokerage account. You can easily engage in rebalancing and diversification and tax loss harvesting and dollar cost averaging. It's easy for the advisor to debit their fee. So we've been waiting for this ETF to engage. So how much, when the ETF comes available, how much will advisors place into it on behalf of their clients? Well, advisors know what everybody's predicting. JP Morgan says Bitcoin is going to reach $140,000. Alliance Bernstein says it's going to hit $150,000. Tiburon says the same thing. Standard Chartered, biggest bank in London, says it's going to hit 175. Citibank says it's going to hit 318. A rather specific prediction, I thought. Guggenheim says it's going to hit 400,000. ARK says it's going to hit $1 million a coin. In the face of these predictions, how much will investment advisors allocate to crypto? My recommendation, which I talk about in my book, The Truth About Crypto, which is available at our booth if you want to go pick up a free copy, what I recommend is a 1% portfolio allocation. The reason I say this is that most advisors are unfamiliar with crypto. Their clients are mostly unfamiliar with crypto. Even advisors who own Bitcoin can't explain what Bitcoin is to their clients. So a 1% allocation is a simple, easy toe in the water. It's not risky. It's not scary. So what if it blows up? It's not going to interfere with the client's future financial security. But because of the outsized investment performance we think may occur, a 1% allocation can have a material impact on the overall profit of the client portfolio. So just 1%, great way to get started. I'm not the only one saying this. Yale did a study in 2018 and said, even if you think Bitcoin will outperform by 200% a year, all you need is 6%. The CFA Institute, which is very closely studied by financial advisors, says 2.5 to 5% allocation. So do the math. Everybody on Wall Street who pays attention to this says low single digits. If you've got 300,000 advisors managing $8 trillion and 3/4 of them are going to put 2% of their portfolios into this new Bitcoin ETF, we're talking about an asset flow of $150 billion flowing into Bitcoin, which, as you know, has a current market cap of about $500 billion. Think about what the impact is going to be on Bitcoin's price. So why won't investment advisors invest more? It's because they believe in diversification. Exponential technologies, AI, nanotech, biotech, bioinformatics, 3D printing, fintech, edtech, agtech, blockchain belongs in that sleeve of exponential technologies. I know most people in crypto have 80, 90, 100% of their personal investments in crypto. Financial advisors won't recommend that to their clients. They are not crypto bros. They are not living and dying as Bitcoin maximalists like Michael Saylor. They're not going to do it. You will turn them off if you try to convince them to do it. They are going to do 1 or 2 or 3% of assets. So you can go ahead and try to get an advisor to give you 100% of the client's money into crypto, and you'll get none of it. Or you can get 2% of $8 trillion. It's up to you. Because financial advisors consider crypto to be in the alternative sleeve, which only represents 13% of portfolios. That includes oil and gas, gold, natural resources. Although it's a small portion of overall portfolios, it's half of advisor revenues. And what advisors are going to discover is that these spot Bitcoins are just the beginning. And they're going to realize that for the simple reason that it's just Bitcoin. And there's a lot more to crypto than just that. Advisors recognize they believe in diversification. They may start with a Bitcoin ETF, but they will soon realize they don't own Ethereum. They'll soon discover they're not investing in Bitcoin mining companies, that they're not investing in crypto exchanges. They're going to soon realize that if they want to really help their clients invest in crypto, they need to go beyond Bitcoin. The Bitcoin ETFs are the door opener for the engagement of advisors, and it will lead to far more engagement on behalf of the entire crypto community. And this is why you are key to this entire conversation. But what you have to recognize, if you're going to succeed in collecting assets that propel your business, you have to engage with financial advisors. And the problem is you don't understand them, and this picture says it all. Financial advisors, beyond all other descriptions, are incredibly lazy people. And I say this to you as the nation's #1 financial advisor in the country, the most successful financial advisor in history. I'm the laziest of them all. Financial advisors do not want to have to build a new tech stack. They don't want to have to retrain their staff. They don't want to have to reculturalize their clients. They want to add a new sleeve into their portfolio simply and easily. They want products and services that integrate into their practice management, help them serve their clients, help them attract new clients, keep their assets under management, and increase it, because that's how they get paid. They want to be able to collect their fee. If you're building a product or service that is designed to go to the end client without the engagement of the advisor will not help you because you'll be a threat to them. If you're going to pull assets away from the advisor is a competitive threat. You need to engage the advisor, help them build their business. So you can either go to somebody with $1 million and get them to invest, or you can go to an investment advisor who has $1 billion from 100 clients, and you will now generate 100 sales instead of just one. Above all, advisors want to stay out of trouble. They care deeply about laws and regulations, compliance, their reputation, and they care deeply about their clients. It's all about KYC, AML, and so much more. You have to make it easy for advisors to engage with you while satisfying their regulatory and legal obligations. They want to make life easy for themselves. They want to make life easy for their clients. So we've got to quit using terminology that consumers don't respond well to. Satoshi blew it when Satoshi called Bitcoin cryptocurrency. Crypto is a scary term. Makes you think of crypts, which is death. Consumers don't like that. Trustless? Advisors spend their whole career winning the trust of their clients. This doesn't serve advisors at all. Clients want someone they can trust. So calling crypto trustless is a turnoff. Zero knowledge proof? You're proving to me that you have zero knowledge? That's what that says. We need to come up with terminology that your mother will respond well to, not a fellow blockchain developer. Why are we using a term that takes 5 minutes to explain? You know that old rule about telling a joke? If you have to explain it, it's not funny. If you come up with terminology that nobody understands, you are pushing them away as opposed to drawing them in. If it isn't real, then it's fake. We need to use terminology that are going to attract your consumer, your buyer, your investor, as opposed to terminology that is meant to show off and make you look really good and really smart. And most importantly, you've got to join in the fight against fraud. In the past 2 years, 46,000 Americans lost $1 billion to crypto frauds and scams. We've seen them all, and we have seen the companies in the crypto space that have been caught up in all of this. We've got to actively engage in putting a stop to it. This bad boy behavior has got to come to an end, and we, the insiders in this community, are the ones most powerfully positioned to assist. We've got to start embracing legislators, regulators, the media, and the financial services industry. I'm sorry if any of you here are crypto bros who want to use your libertarian viewpoint to upend the financial services industry and replace the global financial system. Do me a favor, do us all a favor, get the hell out of our way. You're interfering in our efforts to get broad global engagement of crypto in this industry. If you do what I'm suggesting, the way I'm suggesting you do it, you'll go from having 5% of the world owning crypto to 95%. My goal at DAC-FP is strictly to serve as a bridge between the crypto community and the financial services community. You can't sell your product or service until your end buyer understands what it is you're doing and how it all works and what crypto is. So we've created a crypto video series in Town Hall. It's free for you. These 3 or 4 videos are available to you to post on your website. You can invite your target audience to view these videos for free. We will then come in and do a free webinar town hall with your audience to allow a Q&A environment with me and you to explain all of this to your prospective clients. So I encourage you to learn more about this. I also encourage you, if you want to learn what makes a financial advisor tick, come to our Wealth Management Convergence, March 11 and 12. Hundreds of financial advisors coming not for crypto, but for the broad issues that advisors care about, the top money management issues of today. And we also host in June our 6th annual Vision Conference. This is a crypto conference, but the members, the people who come, are exclusively financial advisors targeting a conference with only crypto content. Last year, we had Patrick McHenry. We also had David Hirsch, who's the head of SEC enforcement of crypto. So this is the top, it's the largest, longest running crypto conference for the financial industry. And I encourage you to learn more about our CBA designation. We have a lot of firms who require their staff to get it. It is the oldest and largest crypto designation program. We have thousands of people who've gone through the course from 37 countries. The first half of the course is all about the tech, which you know about. The second half of the course is about practice management, the issues of how financial advisors and their firms can engage in crypto. We have 5 different tracks, a track for advisors, one for home office professionals. For crypto professionals, when you're hiring people new to crypto, this gets them up to speed more quickly, a track for investors, and we also have an ex-US track that's available in 9 languages. As I mentioned, my book, The Truth About Crypto, which was the #1 Amazon bestseller, is available at our booth. I've also written a white paper that you can download for free on the new spot Bitcoin ETFs to help you understand why these are such a big deal and how it's going to open the floodgates to investment advisor engagement in Bitcoin for the first time in 14 years. And on November 29th, we have a webinar with McKinsey, sponsored by Lionsoul, where we're going to be releasing the results of our latest survey on what advisors and investors are saying right now about digital assets. You're also welcome to tune into my daily podcast where I cover crypto and a whole lot more. And I'm easily reachable, happy to help you out. All I do these days is help the crypto community grow and develop so you can achieve your goals, because if you achieve your goals, you're going to be responsible for the biggest wealth creation opportunity of this century. And that's my goal, is to help Americans create wealth so they can retire in financial security. And you are the key to making that happen. So by my helping you, we're all together collectively helping America. Thank you very much for your time today. I appreciate it. I'll be in the exhibit hall if you'd like to chat. Thank you very much.
Hey guys, thanks for coming out to the 2023 North American Blockchain Summit. It was the best summit yet. We look forward to hosting you again next year. If you enjoyed the summit or like what you saw in this video, be sure to subscribe. If you're interested in learning more about membership in the TBC, go to texasblockchaincouncil.org to learn more.